Okay, so with the market now in officially, I guess you could call it an intermediate decline. I'll show you the charts in today's preview video. But AI is of course leading the way to the downside, but not everything. Yesterday was more of a broad selling. Today was more selective. Not everything. In fact, when you'll notice, the Russell 2000 actually went up today. So we'll break down kind of what today meant, what happened with volatility, what does the breadth look like, some of the most important charts of the day I'll share with you, including the leader, the semiconductor industry in the technology sector. How are they doing? What signs are they telling us? So let's go ahead and get started. Today is Tuesday, November the 18th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, I invite you to click this link up there in the top right corner of your screen. That takes you to this page, our basic subscription page. With a free subscription to our website at Market Scholars, you get access to all of our daily Market Outlook blog posts, including the full Market Outlook video on Fridays. That's free for all of our basic subscribers. Again, just click this join free button. It scrolls you down here, and that's all it takes. So just log in, sign up. That will take you to, that will, like I said, give you access to all of our Market Outlook videos here, or excuse me, blog posts, including, like I said, the free Fridays. If you click this link right here, it'll actually take you to today's blog post. The November it would be 18th. If you're not signed in or subscribed yet, it will show you this page. Just click this button to log in if you're already subscribed. If you're not subscribed, click this join free button. It will take you to this page. Subscribe there. This is what it looks like. This is all the information you get. It's a very good recap of what happened in the market today and what matters to you. Very thorough across all the different asset classes that are out there. And again, it's all for free. And then on Fridays, the video you'll see at the top won't just be the preview video, will be the full version of the Market Outlook video. All right, let's start off taking a look at the S&P 500. You can see we now have the dark pink shading and a red line. We have the bearish intermediate decline. The intermediate line's below 50. We did come off the lows for a second straight day, so we did not finish at strong short-term low points there. So that's actually a small positive sign. Of course, the big mover today was down 2% as semiconductors. Now down 4.5% below the 30-day moving average. You can see that's a pretty significant decline. Dark pink shading and a red line. The first time it's the lowest it's been. Its intermediate line is actually in bearish territory, barely, but in bearish territory there. So that's a pretty telling sign. If you look at its RSI and CCI, it's almost below 40. It's down to its lowest level it's been in months. The CCI is down to its lowest level it's been in months, and now down below minus 150. So clearly we're losing in that area. If we take a look at how technology as a whole is doing, especially compared to energy, you can see and this is an important relationship, because if you look at XLK relative to the market, it has a 93%. This ratio has a 93% correlation with the S&P. So when XLK outperforms the S&P, then the S&P typically is going up. Energy, on the other hand, has a negative correlation with the S&P. This ratio has a negative correlation. So when the energy is outperforming S&P, which has been doing here lately, then it actually corresponds with a negative move in the market. So when you look at XLK relative to XLE, you can see a significant breakdown here. We've had some breakdowns before, but this is, the 8 and 17 day are dropping. The PPO is down to its lowest levels. The long-term PPO is coming down from this higher high point. The CCI is bearish. The DMI, look, the negative indicator on the DMI is at its highest levels of this past year. So pretty significant decline here, more significant than what we've seen, even though the RSI, while in bearish levels, is not down to its lowest levels yet. This is having an impact on breadth. The numbers talks about the 50-day moving average remains below 200. That's a key bearish level. In fact, the 20-day average, this has been such a huge divergence for so long. The 20-day average now is well below 250 and is working its way down. Generally speaking, when that gets down to a low level, it's pretty significant, and it's, again, below 200, easily below 200 there. The McClellan oscillator is also kind of showing signs of weakness. As we told yesterday, we broke below zero for the first time. Here we are again, still below the minus 35 level for a second consecutive day, pushing ourselves even lower below zero. So pretty bearish from that perspective. And finally, the VIX jumped up quite a bit today, considering that we weren't that bearish. But up to 24, so we're up now to the 100% mark relative to the VIX 3M, and the VVIX is up to 124. So this is a pretty strong level for the VVIX. They're both rising, that's why your correlation's back up to 97%. But very strong levels here. If you look at how far the VIX is, for the VVIX to be as high as it is at 124, just to kind of give you an idea, the last time we were, this is the last time we were up that high. Before that, it was back in the washout phase of that correction, and and over here when we first started. So for the VIX back over here, the VIX was actually up in the high 20s. We're still in the low to mid 20s. So for the VVIX to be as high as it is, and the VIX not to be as high, though we are, pretty significantly above the 200-day. It is above its 200-day average by a pretty decent amount here. This is kind of what it's measuring here. So again, not as much as we were back over here on October 16th. We were 31% above the 200-day. We're only 26 right now. And if you look over here, like we started to get significantly higher as we got into that correction. So we're pretty strongly bullish on volatility, but we're not that strongly bullish. And for the VVIX to be where it's at, it is pretty high. And that would suggest either a lot of this is overblown and we're going to bounce up like probably tomorrow, if not going into the middle to end of this week, or we're still kind of lacking that strong move higher, like the big candle. You see, we haven't even had a big candle yet. One of these big candles here with the strong move, and we'll see if that ends up happening itself by the end of the week. I lean more towards the former scenario rather than the latter scenario, but it does, again, kind of show that we are finally in a pullback, right? We are finally in, and we might already be close to being done with it, or we might, just be kind of leaning towards something bigger. Again, I lean towards the former rather than the latter, and I think by the end of the week we'll probably end up being done with it. There might be some lingering ups and downs going through next week, but I think the bulk of the selling is most likely set to be done. And that's our market outlook preview for today. All right, well, that does it for today. If you want access to the full version of our market outlook videos, you have to join our site at our foundation tier. It's just $29 a month. This link will take you there. That gets you access to not just the Friday videos, which you get with our basic subscription, but all the videos, all 5 videos throughout the week. They include a trade idea every video. We put those trades on in real time. We manage the trades all the way to the close. We do that during our Market Outlook Live. That's a live stream we do on our website at 3:30 Eastern time every day. You also get access to our Market Outlook Live trade tracker. We track the results of all of our trades that we do in the Market Outlook. So again, you get all of that for just $29 a month. There's no commitment. It's just you can just pay month to month. You can cancel it anytime. And again, the value, for example, the value that you get out of that, we're close to $10,000 of gains that the Market Outlook trades by themselves have given, and that's just with a risk of $500 to $1,000 on each trade, a maximum loss of $500 to $1,000 in each trade. So it kind of gives you an idea that compares the cost, $29 a month, to what you get out of it, and there's significant value there. Again, thank you for watching. Subscribe to our YouTube channel. Click the thumbs up icon down there. Comment on anything that stood out to you today. Follow me on Twitter for more content at DavidSettle42. Have a great rest of your Tuesday night, everybody, and we'll see you all tomorrow.